Now let's look at cost projections. These include both startup costs and day-to-day operating costs. We have already calculated startup costs. These are only included in year one. What kinds of costs are part of day-to-day operation of the business in year one? 1. Bicycle maintenance, keeping the bicycle working, $50. 2. Smartphone plan that includes phone and internet service, $50 for each month or $600 a year. 3. Employee wages, 5 hours per day multiplied by $8 per hour multiplied by 5 days multiplied by 52 weeks. This equals $10,400 per year. Total operating costs for year one would be $50 plus $600 plus $10,400, which equals $11,050. Let's assume the same operating costs for year 2 and year 3. Now let's look at the income statement. An income statement is a document that shows a company's profit or loss in a particular period of time. In this case, we will be calculating the profit or loss for years 1, 2, and 3. We can find the data for expected revenue in the sales and revenue projections. We can find the expected cost data in the cost projections. Now, we subtract expected cost from expected revenue to calculate expected income. As you can see, income is expected to grow from a loss of $3,250 in year 1 to a profit of $7,150 in year 3. A quick vocabulary note. Income statements often show an income loss in red. Therefore, when a business is in the red, that means it has a loss. When a business is in the black, that means its income is positive and it has a profit. Not surprisingly, our example shows that this startup will not be profitable the first year. The entrepreneur needs to have enough cash to keep the business going and cover the costs that exceed revenue. We calculated simple startup costs, sales and revenue projections, cost projections, and an income statement for Best Bicycle Delivery Service.